All right, let's get right into it. argenx just dropped their Q3 numbers for 2025, and wow. On the surface, it was an absolute monster of a report. But here's the thing. It also created this really fascinating puzzle for investors, and that's exactly what we're going to unpack right now.
So, first up, that headline number. Get this, argenx pulled in $1.13 billion in total sales. And what's really key here is that this is a huge milestone for them. It's the first time their big drug, VYVGART, the one for autoimmune diseases, actually crossed that billion-dollar mark in just a single quarter. That's a huge deal.
And look, this wasn't just a good number. This was a massive beat. Wall Street, the consensus, they were thinking maybe $917 million. argenx just blew right past that by $214 million. I mean, that's not just an earnings beat. That's making a real statement. So here's the paradox, right? The big mystery. They post a record quarter, they absolutely crush the estimates, and the stock? It went nowhere, basically finished the day flat. So what gives? That's the billion-dollar question we're going to try to answer today. All right, first things first, let's really break down these headline numbers. Think of this as the tail of the tape, and believe me, it tells a story of some serious outperformance. Okay, so this wasn't just about revenue. I mean, sure, the top line came in at that $1.13 billion, which is a staggering 96% growth from last year. But the real story, you gotta look at the bottom line. Their GAAP earnings per share, which is basically just the company's profit per share, was $5.18. The street was expecting, $3.56? So yeah, they blew past that. A huge beat on both fronts, just incredible. So the big question is, how'd they do it? How do they pull this off? Let's get behind that big billion-dollar number and take a look at the engine that's driving all this growth. And of course, we're talking about their blockbuster drug, VYVGART. And this really breaks it down for you. You can see exactly where the money's coming from. The United States is just the clear powerhouse, right? It's making up over 85% of all their sales. We're talking $964 million. Now, yeah, international markets are growing for sure, but the US, that's still the core engine for VYVGART, no question. And hey, you don't have to take my word for it. Listen to what the company's CFO, Carl Gubitz, said on the earnings call. He put it really plainly, calling this a historic milestone for VYVGART. The key takeaway here is that this wasn't just another good quarter. This was a structural step up for the whole company, and it was all driven by some really, really smart execution. Yeah, this growth was no accident. It was all about execution. For one, the launch of their prefilled syringe has been a total game changer. It makes the treatment so much more convenient, and it's already attracted over 260 new prescribers. That's huge. And all of this is fueling momentum in its two key indications, right? Generalized myasthenia gravis, or GMG, and CIDP. Both of them are really serious autoimmune disorders. But here's the kicker. They did all of this while keeping their spending in check. They held their OPEX guidance steady, and that signals the kind of financial discipline that investors absolutely love to see. Okay, but here's the thing with a biotech company like this. The story is never just about the quarter they just had. It's always about what's next. So let's shift gears and look to the future. Let's talk about the pipeline that's supposed to drive that next big wave of growth. And man, the future looks busy. By the end of this year alone, they're planning to file for an expansion for VYVGART and another GMG patient group. But really, 2026, that's the main event. We're expecting top-line data, the main results from a trial for a form of MG that affects the eyes and for ITP, which is a rare blood disorder. All in all, argenx is expecting 5, count them, 5 major data readouts that could lead to new FDA approvals. This is what we analysts call a dense catalyst stack, and it's basically the foundation for the company's entire next chapter of growth. Okay, let's recap. We've got a record quarter, we've got a pipeline that is absolutely packed. So let's circle back to our central mystery here. Let's try to separate the signal from the noise and figure out why the market just shrugged. So look, on one side, you have all these flashing green lights, right? The massive beat, analysts from places like Cowen and Bank of America hiking their price targets, that super dense catalyst calendar we just talked about. But then, on the other side, you have the cold, hard reality. The stock closed down a little bit. Trading volume went nuts, nearly double the average. So a ton of people were buying and selling, but the price itself just didn't budge. And all of this really points to one thing. Super high expectations were already baked into the price.
And right here, this is pretty much the smoking gun. Just look at the 3 months before this earnings report came out. argenx stock shot up over 21%. The whole biotech sector was hot too. The XBI was up even more. So investors were already betting on a huge quarter. They were excited about the new syringe, they saw the potential in CIDP. So when argenx delivered this fantastic quarter, it didn't really surprise a market that had already priced in absolute perfection. It was a classic buy the rumor, sell the news situation. Except in this case, it was buy the rumor and do nothing on the news.
Okay, so with all that as context, what's our take? What's the bottom line? Let's get to our final segment, the next call, where we're going to lay out our outlook and our official reading on the stock. All right, here it is. Our rating on argenx is outperform. Why? Because we think the fundamental strength of the business and the sheer density of that 2026 catalyst calendar, that's the real story here. This whole muted reaction to a blockbuster quarter, we think that's just short-term noise. The long-term signal, the thing you really need to watch, is this company's ability to execute on that pipeline. So how do we see this playing out? Well, step one. In the near term, we'd expect the stock to probably trade sideways, maybe chop around a bit as it digests this huge run-up. Step two, and this is crucial, the whole narrative has to shift. It's not about did they beat the quarter anymore, it's about can they deliver on those 5 huge data readouts in 2026? And that brings us to step 3, the trade idea. The way we see it, you could view any market-driven weakness as a potential opportunity to build a position before that catalyst-heavy year really kicks off. It's about positioning for that next big inflection point in the argenx story. And of course, we have to say it, this is not financial advice.